Aaron, how much worry is this causing right now with the inflation data?
Well, it's something of a worry, and it's part of why markets sold off in Asia overnight, in addition to the U.S. jobs data. Basically, you have a situation where the inflation was a little higher than expected, 3.6% versus 3.3% expected. And that may mean that authorities are hesitant to loosen policy as the economy continues to slow down. So that's what markets are worried about.
Big number coming up later this week, GDP figure on China, I believe on Friday. What are people's expectations for that?
Well, people are expecting that the economy slowed, although I think we're still safely in soft landing territory. We may see something like about 8% growth, a little bit under 8% growth is a significant slowdown by Chinese standards, but it's still not, really something to be very alarmed about, I think, in terms of the GDP data.
And one of the big questions is how much can policymakers step in at this point to offer some additional loosening? What are their options that they're looking at now?
Right, so the Chinese have cut the reserve ratio twice. That gives banks a little bit more money to lend. But besides that, they've kind of shied away from stronger measures like interest rate cuts. And so the betting is that they'll continue to cut the RRR, but they may shy away from these stronger measures like interest rate cuts, especially since inflation is looking a little hot right now.
Mm-hmm. And of course, China is watching what's happening in Europe, what's happening in the United States. Their key export markets are slowing down. Yep. That has to be one of certainly the biggest worry on their minds at this point, right?
Absolutely. So actually tomorrow we have China's export data coming out, and the past couple months has been quite weak. So people will be looking to see how China's being affected by what's happening in the US and Europe. Of course, what China really needs to do, as everyone knows, is transition to a domestic-led, consumption-led economy. But that's not something you can do in a matter of months. It takes several years. So in the meantime, they're at the mercy of what happens in Europe and the US.
And how much ability really is there? I mean, obviously, as you say, they want domestic spending to grow. But it's still, even with somewhat stunted domestic spending, it's a huge and complex economy, and yet the government there tries to essentially manage it quite closely. Is there ever any evidence that the complexity is just such that that's going to become an ever more difficult task?
Sure. I mean, I think there's actually it's a little bit odd how much faith the markets put in the Chinese and their ability to manage the economy. And the past few years they've done an excellent job, or maybe they've been lucky, but there's a lot of variables up in the air, and it may be that someday we find that the Chinese aren't as omnipotent as we think they are in terms of managing all those variables. Certainly.
It's very interesting.
Very interesting. Aaron, back in from our Beijing bureau. Thanks for being with us this morning.
Thanks a lot.
Thank you.